Hey everybody, it's Sean from Guaranteed Rate. I got your mid-July market update for you. Hope everybody's having an amazing summer. The weather's been amazing so far. So hope everybody's getting outside, spending some time with their friends and their family and enjoying themselves. I want to talk about the market shift, right? That's all everybody's talking about. The market's different. The market's different. And of course, every market's different. Every market, every year, even during the same year, there's differences. And that's what we're experiencing right now. However, I read a really interesting Redfin report. I'm just going to give you my perspectives on some of these numbers as I talk through them. So this covers June 5th through July 3rd. So pretty much the entire month of June when interest rates had already gone up. It factors in interest rates, impacts buyer activity, all that kind of stuff. So 52% of all homes still sold above the list price. If you compare it to 2021 when the market was crazy hot, it was 53%. So it's virtually the same, right? The same amount of homes are selling over list price as they were last year. What's the difference? Homes are definitely 20% more expensive this year. So if you're a seller, still an amazing market to be selling a home in, right? Now, if you're comparing it to the beginning of 2022, which was the hottest market of all time, 80% of homes were selling in some markets, or 70% in most markets were selling over list price. Yes, it seems slower. But if you compare it to what last year at this time, when we were living the spring market, the summer market last year was excruciatingly hot, we're kind of living in the same world right now. It just feels a little bit different. So it's about the same as last year, but it feels different than the beginning of 2022, okay? Homes that were sold were on the market for a median of 18 days, same as the same period as last year. So obviously, if you compare it to the beginning of 2022, it seems a little bit quieter. However, if you compare it to this exact same time last year, it's the same. 48% of accepted offers were off the market within the first 2 weeks, while 32% of the homes that went under contract had an accepted offer within the first week. So stuff that's going on, if it's priced right, that's the key right now. Pricing it right is going to sell. And guess what? You're still probably going to sell it for more than what you sold it for last year because home prices have appreciated. But if you're a seller, you might not sell it for as much as you would have had you put the house on the market 2, 3, or 4 months ago. January, February, March, April, those were like all-time highs, all-time records, probably maybe the best time ever in our lifetimes to be a seller, okay? The market's changed a little bit, but it's still a great time to be a seller. Also, an amazing time to be a buyer, a much better time to be a buyer than it has been over the course of last year. Why? Well, on average, 7% of homes that were listed for sale had a price drop. I'm sure there's a lot of people that are in this market, whether you're a realtor, whether you're a buyer. If you've been in the market the last 2 or 3 years, you might not even know what a price drop is, right? But we're starting to see some because reality is setting in. What we saw happening earlier this year, where people are starting to sell homes for whatever number they wanted to, future values were being sold for, and people were buying them because there was so little inventory. Inventory has gone way up. In a lot of markets, it's up 3 times as much, 4 times as much as it was earlier this year. So buyers have more to choose from, right? And as a seller, you've got to be way more strategic in terms of knowing your data, knowing what price you want to sell it for, and being realistic with what you put it on the market. We're still seeing bidding wars on 50% of houses. We've still had lots of our clients this year lose out on houses and win in houses where they had to go way over asking price. And we've also had some people buy below asking price, at asking price. It's just not as intense as it was 3 or 4 months ago, but it's still a very hot market, very fast-moving market. And in a lot of ways, it's better than last year because there's more transactions happening because there's more houses on the market. So the average sale to list price ratio, which measures how close homes are selling to their asking price, declined to 101.9%. In other words, the average home sold for 1.9 above asking price. This was down from 102.2 last year. So it's almost the same, right? We are seeing some changes in the market. The market's definitely different than it was earlier this year. You know, it's still a hot housing market. Stuff's still selling asking price. Things are still moving quickly. You have to be smarter. You can't be greedy if you're a seller. If you're a buyer, this is an amazing time to be strategic because although you're paying higher rates than you were earlier this year and what you were paying all last year, you don't have to waive all your contingencies. You don't have to go way, way high over asking price on most of these deals. You know, it's a really, really good time. And hopefully you'll be in a situation, if you get that house, you know, as the market and the economy changes in our country, you'll be in a position to refinance in the future. But you can't count on that refinance, right? You have to budget based on what you can properly afford today. Regarding mortgage applications, right? Also want to compare, give you some data. Mortgage applications were down 3.6%. We're in the middle of the summer. People are on vacation. Kids are out of school. Some people have just kind of decided to take a break and getting ready to get back in the market in September. So, of course, mortgage applications are down. That's normally what happens in a normal summer market. They're down 18% year over year. So they are slower than last year. Why? Largely down year over year because there was less inventory this year. So that's why we've seen less people file for homes. And then the other piece to it, the big piece to it, is mortgage rates have gone higher. Some people have taken themselves out of the market because they can't afford to buy, right? They can't afford to pay the higher home prices with a combination of higher mortgage rates. Okay. Interest rates, we're seeing rates, they've come off what they were a few months ago. So the big headline in beginning of June and to May, rates were up to like 6.25% on an average 30-year fixed on a conventional loan. Now we're seeing average 30-year fixed rates on conventional loans in the mid fives, right? So they've come down quite a bit. And then we're seeing jumbo rates still on a 30-year fixed. We're seeing them in the mid to high fours, which is still, again, historically speaking, if you take 2020 and 2021 out of the equation because rates were super low due to stimulus and due to pandemic, right? And hopefully a once in a lifetime event, these rates are amazing at any other point in history. So rates are in the mid fives on a 30-year fixed conventional, jumbo, still seeing them at 4, great mortgage rates. Refinance activity, it's way, way down, right? A lot of people got their refinances in. Most of the refinances we're seeing, refinance activity, just so you guys know, is down about 80% versus last year. Refinances make up for mortgage companies about less than 20% of transactions right now, whereas this time last year, they were like 60% of transactions. Most of the refinances that we're seeing right now, cash out for home improvements, cash out for debt consolidation, divorce buyouts, stuff like that, need-based refinances. We're not seeing a lot of people take advantage of rate and term refinances. Mostly everybody got those in, although there's still some outliers out there with people with really high rates that did nothing. I think it's important, especially to take advantage of this rate drop, to look at it. If you still got something, if you're one of those people out there that have a rate in the 6s or 7s, and you want to get out of it, or if you got an adjustable rate mortgage, you're not comfortable with that, definitely still a good time to be looking at that stuff. I personally think that, this is kind of getting close to the top end of the rate range. I don't think we're heading to the 7s, 8s, and 9s like some people are predicting. I think we're going to be kind of living in these 5s and 6s maybe, because we've already tested that range, but I don't think we're going way, way higher than that. Why? Okay, so let's talk about some big news that came out last week. Inflation hit a 41-year high. The year-over-year inflation rose from 8.6% the previous month to 9.1%. So it's a big headline number. It was higher than expected. To kind of give you an idea, inflation is increase in goods and services, the cost of money, right? So rents are up anywhere from 10 to 20% year over year. Energy prices, of course, are way up. The annual gain on energy prices up 42%. Gas prices are up 60% year over year. Food prices are up 10%. Used car prices, that's been a big one. Everybody talks about it's hard to get a car or a boat or pretty much like anything, right? So those are all up. Why is inflation an issue? The economy got flush with cash, with all the stimulus money in 2020 and 2021. So a lot of money out there. And then major supply chain issues. Obviously, COVID was a big part of that. And then I think the Ukraine-Russia war totally threw all the Fed's plans out of whack, and it's caused inflation to continue to be a thing, along with the COVID issues that are still occurring in China, India, and all that kind of stuff, and where we rely on lots of our goods and services in our country. So inflation is a big thing that the Fed is watching, right? They want to be at 2% inflation. Right now we're at 9% inflation, okay? Their plan was to be back down into the 2s. If you look at all the expectations that were released towards the end of last year, everybody was like, let's get back down into the 2s or 3s by the end of this year. That's not going to happen. The supply chain's still a mess. Inflation's still the real deal. So it's definitely something the Fed has got a spotlight on it. I'm predicting that next week when the Fed makes their announcement, they're going to raise anywhere from 75. 75 is the expected number. I wouldn't be surprised if they come out with a 100 basis point rate increase. That's going to be talked about a lot next week. I think it's that the markets, if they raise 100 basis points, will like it. The stock markets, the interest rate markets, the bond markets, I think everyone will like it because it will signal to the markets the Fed is serious about controlling inflation and actually doing something about it. So we're on the lookout for that. Okay. One really super interesting thing. I hope everybody's paying attention to this one. Home buyers are canceling deals at the highest rate since COVID. Okay. So about 60,000 purchase agreements were canceled in June of 2022. So that's about 15% of all deals. So why is that happening? Here's my thoughts on that. Couple things. One is buyers actually are able to get contingencies now, right? So before, a couple months ago, or even parts of last year, if you had to get your offer accepted, you were waiving your mortgage contingency. You didn't have an appraisal contingency. You didn't have an inspection contingency. So buyers now have those normal contingencies, so they're able to opt out of a deal, okay? So that's one part of it. I think that's a very big part of it, is that, they're able to protect themselves if they don't like something that comes up in an inspection, if the appraisal doesn't come out the way it want it to work, if the mortgage product maybe changes on them, whereas in the past they would have to go from one mortgage product and they figure something else out, and to avoid losing their deposit, now they're able to say, you know what, maybe this isn't the right house for me. Okay. So the media love this article. People are canceling, people are canceling, people are canceling. It's because it's becoming a healthier market and buyers have some more rights. They have inspections, appraisals, and mortgage contingencies. So instead of losing their deposits or being forced to buy a house, they're just opting to buy something else. Okay. So that's one part of it. Number two is that it's most important for mortgage people, for real estate agents, everybody that's a professional, to advise their clients at the highest level we've ever advised them. I think it's super important to set very clear expectations about how the market is now, what's changed, what's different. It's really important to provide tons of data around that and knowledge and experience and research. If buyers are going into this with improper expectations about what their monthly payments are going to be because of the rise in interest rates, if they're going into this about maybe feeling like they overpaid for a house, or if they don't have enough information about the neighborhood or whatever. So I think it's really important for us as professionals to step up our service level and do the research ourselves and provide it to our clients up front. If you're a sports team, we're at the golf tournament last week, the British Open, those golfers don't just show up and start playing that golf tournament the day of the tournament. They get there weeks in advance, right? They practice hundreds of times, right? They research the course, they do all the research, then they go out and play. We've got to set our buyers up for the same things in terms of what we're doing is we're making sure that before somebody goes out and makes an offer, they understand clearly what their loan programs are. They understand what their rates options are today, not what they were months ago or years ago, what they are today, how that impacts their monthly payment, what they should be budgeting for down payment, what they should be budgeting for closing costs, what they're going to have left over to do the work and to take on the responsibility of homeownership. These are all the things we're talking about with somebody today. As a real estate agent, you've got to talk about how to properly negotiate a deal, what could come up with the house, the data points around what they should pay for it, all of those things, and how the negotiations are going to go. So I think it's really, really important to provide our clients with knowledge, expectations, and it's all about preparation. And if you're a buyer, these are the things you should be asking about. Don't just go and make an offer, get emotionally involved in a house, and not know all these things. So these are the tips I have for you guys this week. Okay, that's the market update for this week. I have some other little videos we're going to release over the course of the week as well. Hope everybody's doing awesome. As always, if you have any questions, hit us up. Shant@rate.com is my email. Direct message us. And also, as a reminder, we're kicking off St. Jude Walk Run season. It's in September. We'd love to raise a ton of money, raise awareness for people that need it the most. It's our 6th year. We've raised hundreds of thousands of dollars. We've had so many people join us in those efforts. So we'd love it if you could join us again this year and help us raise money for people that need it for an amazing research hospital. So thank you so much. Have a great day.